How's it going, everyone? There have been a couple instances in the past few weeks that have come up to lead me wanting to talk about what I'm gonna explain today. One of the main things is every year the IRS puts out their list of what they call their dirty dozen. And that dirty dozen list are the top scams or the top kind of tricks that people need to look out for when they are going to file their tax returns or when they're going to go work with someone. And the reason that they do this is because they have a general interest in making sure that you, the taxpayer, get put into a situation where you are not going to be defrauded, where the integrity of your tax return is going to maintain intact, and you are going to do things that are going to put yourself into a position where nothing illegal is going to get done. And there have been a couple instances or a couple situations in the last couple weeks where I've gotten lots of questions about, hey, did you know that this was going on? Or did you know that that was going on? Or should I do this? Or someone told me about a way to get so much more money back from the IRS. And what are your thoughts about this? That I feel like it's important that just on a general level, you understand who you should be taking advice from, what you should be looking for when you take advice from that someone, and how to work with someone to put yourself into the best position possible so that you do things legally, but you get the most amount of money, you squeeze the most amount of juice out of your tax return, to say the least. A couple of these instances, just so that you guys can kind of follow along and understand maybe what to look for. There have been a couple firms, I will say, in the last month or two that have all been charged with defrauding the federal government and tax fraud for incorrectly filing employee retention credit. Now, the ERC credit is a credit that was issued by the federal government during COVID for employers to retain employees, and it benefited a lot of business. However, there are some who went above and beyond to try and get more money from the federal government for their customers, and answered questionnaires or filed documents in a way that would allow the government to send them money. I would argue that they did so illegally. Maybe not in some instances illegally. However, they created a loophole for themselves to gain benefit. That's really what happened. And so that's kind of one instance is this ERC credit. I've also been in several different meetings or group settings where people have talked about marketing for ERC. And as they've gone on to explain about ERC credit, it's interesting because they will talk about things that are not even qualifications to qualify for the ERC credit. Another instance that's come up quite a bit over the last little bit are people or groups of people who will provide trainings or provide consultory services for business owners or individuals or investors who are looking to try and reduce their tax liability. Don't get this twisted. That is very important. However, the people that are providing this advice are not qualified to do so. What makes a person qualified? Brady, why are you qualified? Or what makes you more qualified than anyone else? It all comes down to licensing. It all comes down to education, and it all comes down to understanding the tax law. When it comes to taxes, in order to prepare tax returns for a fee, okay, in order to be able to receive money and prepare tax returns for other people, there are three different degrees and I'm not talking about a bachelor's or a master's degree. I'm just talking levels. There are three levels with which an individual can prepare tax returns for a fee. And based on what level that individual might be, also determines the amount of representation that they can provide those clients. So the first kind of base level that I want to make sure people understand is that is a tax preparer. Now, anyone who is preparing tax returns in exchange for a fee has to submit documentation. They have to provide a background check. They have to provide fingerprinting, and they have to receive a certification from the IRS to be able to prepare tax returns. Now, a tax preparer, that is what they're called, has the ability to prepare tax returns in exchange for a fee. And a tax preparer can represent their clients in some degrees to resolve tax matters when it comes to working with the IRS. A tax preparer cannot represent any other individual that they have not prepared a tax return for, and they cannot help their clients in the event of an appeals or a tax court representation. They're not qualified to be able to represent those clients. Okay. There's a lot of really great tax preparers. There's a lot of really crappy tax preparers. In some instances, when I was in that position, I was required to show proof of my tax preparation identification to potential employers or potential clients who wanted to verify that information. And that's a registration that I have to maintain even with other degrees. Okay, if you're wanting to prepare tax returns, I still have to renew my prepare identification number every single year to be able to prepare returns for a fee. The next degree or the next level is an enrolled agent. Okay, an enrolled agent, or EA, is someone who has taken a 3-part test with the IRS and passed that test, deemed qualified to be able to perform or file tax returns, give tax advice. They're able to represent their clients in all tax matters as it relates to the IRS, and they are also able to represent others who are not their clients with the IRS. Now, I could say that the next level above that is a CPA, or a certified public accountant. However, I don't feel like that does that much justice, because there are actually lots of enrolled agents that I know of who are far more qualified than a certified public accountant, especially when it comes to tax. Now, I'll kind of dive into this as well. A certified public accountant is an individual who has received certain levels of education through post-secondary university studies, certain hours or certain degrees, maybe a master's degree, or I think it's 200 plus accredited hours at an institution of higher level accounting. And then what they do is they go take a test, different to but similar in capacity to the enrolled agent exam. However, they take an accounting test with the state, much like a state bar exam for an attorney, or a state cosmetology test for a hairdresser or a barber. And the state is the entity that provides the certification for that individual once they pass those tests, those 4 tests, to be able to achieve the status of a certified public accountant. Now, what I will say is, from a tax perspective, now this is just strictly tax. From a tax perspective, the certified public accountant, in my opinion, has a lesser degree of influence than an enrolled agent, only specifically because all 3 sections of the enrolled agent exam, or the SEE exam, are related to tax law, tax matters, tax advisory, tax representation, tax process. That is the SEE exam. The CPA exam, however, covers much more than just tax. In fact, a section of one of the tests for the CPA exam covers tax. There is compliance and audit and financial accounting that are all included in the CPA exam. And so I would actually argue that the CPA exam actually focuses more on accounting rather than tax. There is a section of tax, but it focuses more on accounting. And what you'll see is then once an individual passes the CPA exam, there's typically 2 or 3 directions which an individual goes. They either kind of go auditing, they'll go financial accounting, or they'll go tax. And in 2 or 3 of those ways, there's lots of CPAs that don't understand tax. And I would argue there's enough difference there to where if you're wanting to work specifically with a CPA, make sure that they are specialized in tax. Now, there's kind of this third offshoot, if you will, which is kind of what I was referring to earlier, of individuals who think they understand, and some of them do, but think they understand tax laws or business or finance to a degree where they provide tax advice to individuals on ways that they can reduce their tax liability. There's one that I know of personally who provides advice to entrepreneurs and investors on how to reduce their business income so that they don't have to pay taxes on that income. Now, the problem is not that they are providing advice on how to try to become wealthy or how to invest. I think that's a great or noble venture. The problem is that there is not enough understanding in the tax law to be able to provide tax advice. The second problem is that the individuals that are giving this advice are not necessarily the individuals whose names are filed on the return where the advice is written down. Now, there's a couple problems with this. And early on in my career, I was put in a position where that was happening. An individual who was giving advice, which may or may not have been correct in a lot of instances. A lot of it was good. There was some that was questionable. But this individual's name was not going on the returns. It was other individuals within the organizations whose names were going on the return once the review was done in the process. Now, the problem with this is when the IRS receives that tax return, there are two names that sign that return under penalty of perjury. And what that means is they attest to the veracity of the information on that tax return. Well, in this instance, if there is bad advice given, or there is a situation where an examination of a tax return happens, the individuals that are responsible for the information that's on that tax return is the individual whose tax return it is, whether that's a business tax return or a personal tax return, and the individual that helped prepare and file that tax return with the IRS. You can see that if someone else, a third party, is giving that tax advice, there could be a problem with them giving bad advice and not having any responsibility for the outcome when that examination is determined. In the event of the ERC, and maybe why I think it's part of the Dirty Dozen, or I would actually argue that this is one of the top 2 or 3 things that the IRS is looking for in examinations right now. Everyone who is subsidizing the process of ERC credits are individuals that are not filing tax returns. Now, one thing that I've said for a long time is at this point in the game, we're 2023, March of 2023. If there's a business that has not filed for ERC at this point, it is because 1, they did not qualify for it, or 2, they had a very crappy accountant that did not recognize that the client qualified for it and never filed for them, okay? But you have a lot of people who are giving advice to individuals on matters that may or may not be correct, but that individual will have no liability for. In fact, there have been several instances where individuals have come to us and say, hey, we worked with so-and-so to file for the ERC. My accountant said we would not qualify for it, and so they dropped us. Now, upon taking that client in and onboarding that client, I had to clearly outline what qualifications needed to be met to qualify for the ERC. There have been some that really did qualify for it, and I felt like their accountant was just a little bit too strict or by the book. Not by the book, but just they were too conservative with their tax return. And there were others who I could tell did not qualify for it. And we had to take the approach of, you are going to have to pay this credit back with possible interest and penalties, or we need to contact the IRS and let them know that we do not want this credit because we did not qualify for this credit, and this is the opinion of my new tax account. And when I have said that, there have been 1 or 2 have actually left and tried to go and find someone else, and that's fine. However, I want to make it abundantly clear that as an individual, as a business owner, as an investor, as an entrepreneur, you need to be taking advice from someone who is willing to stick their neck out for you and put their name on the tax return. Now, how can I find someone like that? My first response is to look within the circles that you operate, maybe the different masterminds you're in, or the different investment groups, or the different entrepreneur spaces or groups that you're a part of, a BNI group, and look for an accountant who's familiar with your industry or has the same mindset and goals, right? One thing that I say quite often is there's not enough accountants who do what their clients do. There's not enough business owning accountants. There's not enough investing accountants. There's not enough accountants invested into real estate to understand the nuances of that to help their clients. So find an individual who has a tax planning mindset, but is qualified to be able to provide that advice for you. The other thing I would be wary of is if you're working with an accounting firm whose names do not appear on their tax returns. Make sure you're working with someone whose name or the name of someone in their firm is filing that tax return that you have communicated with and you have reviewed that tax return with. By doing so, you will have someone that you can go back to when shit hits the fan to be able to recollect on that tax return. Okay. And the other thing I would say as well when you're interviewing accountants is ask for some of that verification. Like I said, I've never been hesitant to be able to provide my documentation or have clients look up CPA designations or licenses or enrolled agent licenses for employees that work in my firm. And to be able to provide those gives that vote of confidence to the client. I would admonish you to look out for get rich quick schemes. Those very rarely work. And I would also advise you to look out for people who frequently use words like loophole or pay zero taxes. It is possible to not pay any taxes, but loopholes are unintended consequences of the written law. And I don't look for loopholes. I look for opportunities because the tax law is over 5,000 pages long, and there's really only a page or two that tell us what what income is taxed and to what degree that income is taxed. Apart from that, I would just be extremely knowledgeable or look for opportunities to become knowledgeable when it comes to your taxes. And I actually just did a podcast with my partner Mike, and one thing this was the best way that he described it, but he said working with your advisor, whether that's accounting or tax, is like having sex. And if all you do is lay down and you do not actively participate, you are probably not going to get out of it what you could get out of it if you were actively participating in that activity. All our clients that pay the fewest taxes are the ones that communicate with us the most. All of our clients whose businesses revenues continue to increase are the ones that are communicating with our team the most. And by doing so, I promise you that you'll be able to find ways to continuously make more money, increase your wealth, and find opportunities to pay fewer taxes.